USDA indicated that they were going to make adjustments in the domestic and global balance sheets as we go into this crop report for the 2017-18 and 2018-19 marketing years based on what it perceives will be the implications of that trade war. They made a statement on the crop report that they assume that current policy will continue to be policy through the period covered by the report. So in other words, they are assuming, and I don't know, frankly, I don't know how else you do it if you're in their shoes. They're assuming the current trade policies, which means tariffs, will remain in effect throughout the 2018-19 marketing year. We don't know if that'll be the case. We certainly hope not. But that's the assumption they made. So to some extent, maybe it answers some questions when you look at this crop report. To some extent, maybe it creates more questions. But the bottom line is that the markets have been trading so much downward momentum with billions of dollars behind the algorithmic traders trading momentum that it became really a thing of who wanted to step in there. End users certainly like the lower prices, but prices keep coming toward them, so they didn't feel any real push to really step in and extend coverage aggressively. Producers had no interest in selling, but then again, most of this has been fund-driven to a great extent as well. The speculative trader went from long, relatively good-sized net long positions back in May to net short now. And so, you know, at what point, as I talk to fund managers, some of them would say, yeah, I think we've gone down too low, but where do you step in and buy? They're a little bit afraid to step in and try to catch a falling knife. That usually doesn't end well. So with the buyers pretty well afraid and stepping to the sideline ahead of this report, with an anticipation that it was going to be a bearish report, especially for soybeans, that just allowed the momentum traders to continue to push prices down.